Good afternoon, everyone. It is a beautiful Tuesday afternoon, and I wanted to give an update of something very interesting what is happening in US. Okay, there is a lot of pressure on the US Federal Chairman Jerome Powell to resign. We have been following this for quite a while. Trump has been very vocal about his criticism on Powell, and he's been saying that interest rates has to come down. Powell is resisting to reduce interest rates. So that has created some kind of a conflict, and now there is a lot of pressure, added pressure. What is the latest development? Latest development is about a 2.5 billion project that has been done for the renovation of a Federal Reserve building. Now, Trump is accusing, or his allies are accusing the Federal Reserve, or accusing directly Powell, that there has been a $700 million of cost overrun for some luxury additions to the Federal Reserve building. Now, obviously, the Federal Reserve has said that it is all necessary additions and there is no luxury element about it. But the bottom line is there is pressure on Powell to resign. Now, this again brings back the debate of autonomy of Federal Reserve and how they need to be independent and not governed by political masters. All those things have come back again. But now let us get into what is actually happening, and I want to give you a brief idea of how interest rates and inflation have evolved in the US, and then we'll also talk about the dollar index. After that, I'll come back to the effect of what could happen in the foreseeable future. Okay, so this is what I wanted to show a chart. The gray line is the Fed funds rate, and it is, for a while it has been between 4.25 to 4.5%. And this blue line is the US CPI, the consumer price index, okay, the inflation index in US. So we see that the blue line is comfortably below the gray line, and in one way Trump is okay to say that inflation is lower and interest rates needs to come down. But what Powell is trying to indicate is that the tariff that US is likely to impose on multiple nations, and some they have already imposed, that might stoke inflation. So Powell and his team is not ready to reduce interest rates yet. Not reduce interest rates yet. Okay. So, but Trump is pressurizing, and he is also looking at lowering interest rate, because his argument is that that will reduce the debt servicing cost for US, looking at obviously the massive US debt they have. Okay. So now, even if Trump puts additional pressure and Powell resigns, even if that happens, obviously there will be a knee-jerk reaction in dollar index. I wanted to show you the dollar index chart also. Okay, as you can see, now it has risen a bit, and just last week I indicated that there are technical signals that the dollar index might go higher. Okay, but this chaos that is being happening between Trump and the Federal Reserve Powell, that could create some kind of a knee-jerk reaction if Powell does resign. Okay, now what will happen subsequently? Let's take Powell resigns, and you have the Trump nominee as the Federal Reserve Chairman. So there could be a complete shift in the Federal Reserve in terms of moving from a more balanced, data-driven approach to a dovish approach where they can look to reduce interest rates. Now understand inflation being slightly not really low but getting elevated. There is a CPI data coming tonight at 6 p.m. IST that is expected to come at 2.6%. Earlier was 2.4, so the inflation is going higher. Powell is saying with tariff the inflation could go higher again, and not very comfortable with reducing. But if Powell goes and the new incumbent comes in and he looks at reducing interest rate, now that could be some kind of a turmoil in the US economy. Inflation being higher and interest rate coming down, we could see effects of stagflation. Okay, and that is obviously, all of us understand, not a very comfortable economic situation. But what is going to have an impact is, if US does cut interest rates with the new chairman coming in, then the dollar could weaken. Okay, we could see a substantially weaker dollar if that happens, and all the other currencies will gain. Cutting interest rates will also give a boost to equities in the short term, but the rate sensitive, tariff sensitive sectors will have a negative impact. It could also reduce the 2-year bond yields. So there is a lot of chaos that can happen if interest rates are reduced abruptly in the US going ahead. But the biggest impact is that the dollar index can come down quite a bit. But remember, it is the Federal Reserve. There are other members, 12 voting members, and all might not toe a line. But with Trump being super powerful, having control of the Senate as well, so he will look to exert his pressure and try to get interest rates lower. So what is in store for dollar exporters in India and importers in India? So if dollar does weaken, rupee will gain, and if rupee gains, then that's not a comfortable scenario for exporters. So the exporters should look to maintain a minimum balance of hedge. How much is your hedge is your policy, but you should keep your position hedged. Now, if rupee gains and dollar is expected to weaken, then that will benefit the importers. So importers can keep more of unhedged positions. So a lot of things lined up in the future, a lot of events can create uncertainty, but the bottom line is there will be volatility, and if interest rate cuts does happen, that could lead to a weaker dollar. So that's it from my side. You guys have a great day. Take care.